In Australia, tax is one of those things that's just unfortunately unavoidable. Once you start working and earning an income above a certain amount, you will have to pay tax, just like your parents, your friends, and family. Now, tax is a very extensive topic, and therefore, it's going to be impossible to cover everything. In fact, not even the best accountants and tax specialists in Australia will know every tax law off by heart. This is firstly because there are too many tax laws out there, and secondly because tax laws change from year to year. So what we're going to do over this module, rather than quote you every law, is simplify how the system as a whole works. And the purpose is to have you better informed so that you're more confident when you eventually arrive at tax time. Firstly, before the government receives any tax from you, it has to identify who you are and how you earn an income. For instance, the government could be taxing you as an individual who might be an employee of an organisation. They could be taxing you as an individual who operates their own day-to-day business as a sole trader. Or perhaps the government could be taxing an incorporated company that you own, because the Australian legal system treats a company as a distinct and separate legal entity. And depending on which category applies to you, determines which tax laws do and don't apply. Now, regardless of which category that applies to you, you must have a unique tax file number, also known as a TFN. This is something which you must apply for, and it stays with you for life, even if you change your name, your job, or move overseas. As we've discussed in other modules, if you own a bank account, if you have a super fund, or apply for a student loan, you will indefinitely be asked for your tax file number. And this is in place so that you cannot hide money from the Australian Tax Office. You will need to use your TFN when you fill out a tax return come the end of each financial year. And the purpose of this document is that you declare the various forms of your income to the government, and from this they'll calculate your overall tax bill. In some cases, if the government has withheld tax from you, which we'll discuss a bit later, you can potentially claim back money if you've actually been overtaxed. What we've been talking about so far are only the direct forms of tax that can be imposed on you by the government. However, it's worth noting that there are also indirect taxes that you can face, and the best example of this is a goods and services tax, also known as GST. This is a cost added to the price of items like clothes and electronics, which is collected by businesses on behalf of the government. Between 2006 and 2016, the GST rate was 10%, but the rate is susceptible to change. A final thing to note is that Australia has a progressive tax system for all individuals. This basically means that the higher the income which you receive, the higher the level of proportional tax you're liable to pay. So the government creates different income tax brackets or thresholds which determine the rate you pay. This system is really designed so that Australian citizens have a net of tax income that increases at a decreasing rate. The government does this for a few reasons, like redistributing wealth to low-income households and curbing the establishment of different social classes. And that's a brief summary of Australia's tax system. This sets the scene for us in the next topics to discuss more specific issues like assessable income and tax deductions.